The year is 2025 and the stock market is soaring, driven by one thing, artificial intelligence. It feels like a golden era, doesn't it? Every day, a new AI startup seems to reach $1 billion valuation overnight. Tech giants are pouring unimaginable sums of money into AI research, and investors are fighting to get a piece of the action. The media is full of stories about AI changing the world, promising a future of unparalleled productivity and innovation. It sounds incredible, almost too good to be true. And maybe, just maybe, it is. Today, we were going to talk about something that very few people are willing to discuss, the dark side of this AI gold rush. We'll explore why this incredible boom might actually be a bubble, one that's growing bigger and more fragile every single day. And most importantly, we'll look at why it could burst in 2025, catching almost everyone completely by surprise. This isn't about fear-mongering. It's about being prepared and understanding the real risks that are hiding in plain sight. So stick with me as we peel back the layers of hype and look at the hard truths behind the AI revolution. First, let's understand what a bubble is. Think back to the dot-com boom of the late 90s. Everyone was throwing money at any company with a com in its name, convinced they couldn't lose. Valuations shot up to insane levels, completely disconnected from actual profits or even a viable business plan. Then reality hit. The bubble burst, and trillions of dollars in market value vanished. Many people lost everything. Now, look at the AI landscape today. Do you see the parallels? We're seeing companies with little to no revenue being valued in the billions simply because they are in AI. This is classic speculative fever. The price of an asset is no longer based on its fundamental value, but on the belief that someone else will pay even more for it tomorrow. That's the definition of a bubble. The fuel for this fire is a concept called cheap money. For years, interest rates were at historic lows. This made borrowing money very easy and cheap, encouraging massive investment and risk-taking. Companies and venture capitalists had cash to burn, and they poured it into the hottest new trend, AI. But that era is over. Central banks around the world have been raising interest rates to fight inflation. This makes borrowing more expensive. Suddenly, the endless river of cash that was funding these speculative AI ventures is starting to dry up. When the money gets tight, investors get nervous. They start asking tough questions about profitability and a clear path to revenue, questions that many AI startups simply can't answer. This shift from growth at all costs to show me the money is a major crack appearing in the foundation of the AI bubble. Another huge issue is the problem of monetization. Yes, AI is incredible technology. It can write poetry, create stunning images, and analyze data at lightning speed. But how do you consistently make money from it? Many of the most popular AI applications right now are either free or very cheap. The companies behind them are burning through cash at an alarming rate just to run the powerful servers needed for these models. They're hoping to figure out a profitable business model later. This is the exact same monetize later strategy that failed spectacularly during the dot-com crash. Hope is not a business plan. Without a clear and sustainable way to generate profits, these sky-high valuations are built on sand. How long can a company survive when it's spending billions more than it's making? Not forever. Then there's the hype cycle itself. The media and market analysts are constantly pushing the narrative of an AI-powered utopia. Every new development is hailed as a world-changing breakthrough. This creates immense pressure on companies to deliver on these grand promises and to do it quickly. But real technological progress is often slow, difficult, and filled with setbacks. What happens when the public and investors realize that artificial general intelligence, or AGI, isn't just around the corner? What happens when the promised productivity gains don't materialize overnight? Disappointment sets in. The hype turns to skepticism, and the buying frenzy turns into a selling panic. We're already seeing signs of this. The initial wow factor of tools like ChatGPT is wearing off, and people are starting to see their limitations. This is a natural part of any technology's adoption curve. but in a bubble, this phase of disillusionment can be the pin that pops it. Let's also consider the competitive landscape. Right now, a handful of tech behemoths control the majority of the resources, the data, the computing power, and the top talent needed for advanced AI development. This creates an incredibly high barrier to entry for smaller startups. While a few might get lucky and be acquired for a massive sum, most will struggle to compete. They are caught in a difficult position. They need to spend huge amounts of money just to keep up, but they don't have the deep pockets of a Google or a Microsoft. As the financial environment gets tougher, we could see a wave of these smaller AI companies failing or being acquired for pennies on the dollar, which would send a shockwave of fear through the market and trigger a sell-off. So why 2025? Why is that the year this could all come to a head? It's about the convergence of all these factors. By 2025, the full impact of higher interest rates will have worked its way through the economy. The venture capital that was raised during the boom times will start to run out for many startups. The pressure to show actual, substantial profits, not just user growth, will become immense. We will also have had enough time to see which AI applications are truly valuable and which were just novelties. The gap between the hype and the reality will become too wide to ignore. It's the perfect storm. The money dries up just as the patience runs out. When this bubble bursts, it will be fast and brutal. Unlike past crashes, today's markets are dominated by algorithmic trading. Computers will execute sell orders in microseconds based on pre-programmed signals, creating a cascading effect that can wipe out market value in minutes. Human investors won't even have time to react. The panic will spread from the overvalued AI startups to the big tech companies that have invested heavily in them, and then to the broader market. It will feel like the floor has dropped out from under everyone because the escape route will disappear before most people even realize they're in danger. Now, this isn't a prediction set in stone. It's a warning. It's a call to be critical, to look past the headlines, and to understand the risks you're taking. Don't get swept up in the mania. Do your own research. Focus on companies with strong fundamentals, real profits, and a clear, sustainable business model. Diversification is more important than ever. Don't put all your eggs in the AI basket, no matter how shiny it looks. True wealth is built by investing wisely over the long term, not by gambling on the latest trend. The AI revolution is real, and it will change our world in profound ways. But the journey from a revolutionary technology to a profitable industry is often a long and bumpy one, filled with bubbles and crashes along the way. Be prepared, be smart, and don't be the one left holding the bag when the music stops. Thank you for watching. I know this was a heavy topic, but it's a crucial conversation to have. If you found this analysis helpful, please hit the like button and subscribe to the channel for more deep dives into the markets. I'd love to hear your thoughts in the comments below. Do you think we're in an iBubble? Let's discuss it. Stay safe and invest wisely.